going on, Noel here. When I started out with everything credit cards, rewards, points, and miles, I didn't even think about how taxes would come into the equation. And when the numbers went from hundreds to multiple thousands of dollars, you best believe I was looking for answers. This video is what I wish I had access to back then regarding tax-related questions when we're talking about everything regarding credit card rewards. We'll be getting answers from a tax professional, not someone who's just capable of filing your taxes, but also provide insightful tax-related advice. Noel Lorenzana is a friend of mine now, and we met at FinCon, which is an event where finance YouTubers and finance content creators all meet under one roof every single year. We hit it off, and this is essentially the first collab in the channel in this way, and he's here to answer some of the questions which I wish I knew the answers to in the beginning. I wanted to make it to share with y'all in such a way that hopefully it benefits you too. I hope you learned something today and get some resolution if you've had the same or similar questions. With that, I'll leave Noel's channel description a link below. Let's get straight into it. Starting us off, the first question is regarding sign-up bonuses. They're also known as new card member offers, sign-up offers, intro bonuses, and items like this. So for example, if you're gonna earn 60,000 points after spending $4,000 a minimum spend in the first 3 months with the Chase Sapphire Reserve, another card, for example, by Chase is the Chase Freedom Flex, where you're gonna get $200 cash back after $500 a minimum spend in the first 3 months. Let's see what Noel has to say regarding credit card sign-up bonuses and taxes.
Hey Lalit, thanks for having me on today. So as to the question, are credit card sign-up bonuses taxable? Surprisingly, the IRS hasn't given clear guidance on the subject, but we can figure things out based on existing guidance. For example, in general, the IRS considers something as income no matter where it came from. So if you found $100 on the ground, the IRS says it's taxable, and you're supposed to report that on your tax return as other income and pay tax on it. In your example, a credit card sign-up bonus for points after you spend a certain amount, this would be viewed more like a rebate or a discount, and it would not be taxable. Now, if you received a large sign-up bonus up front without having to do anything, then the IRS would likely view that as taxable income. So it really depends on how the reward was received.
Apart from the one-time bonuses, let's say I'm spending on a certain card, I'm also able to rack up rewards over time every single purchase. Within the span of a year, it's definitely possible to rack up enough points to be considered the amount of, let's say, a side hustle. The question is there a delineation between sign-up bonuses and reward points that are earned through organic spend?
Similar to the previous example, points, miles, and rewards that you earn from making purchases with your credit card are not taxable. The IRS considers these rewards to be like a discount. So if you earned, say, $200 cash back after you spent $500 on purchases in your first 3 months from opening a Chase credit card, none of those rewards are taxable because you were required to spend money in order to receive them. You can think of these types of rewards as rebates or discounts.
I've always wondered, let's say my income isn't very high. And just for context, what I mean by very high is, let's say that I'm consistently traveling every single week, international first class, each and every week over the whole span of a year. From the outside looking in, it could definitely seem expensive, but my income may not be able to support that type of experience. Yet credit cards, points, and miles can definitely offer this type of experience. And I've always wondered, does the IRS care about this? With this context, Noel kindly repeated the question in his own words, and with that, I'll let him take it away.
As an individual with no business, let's say I make $30,000 yet spend $100,000 in a year, are there any IRS red flags that are triggered? This could raise a red flag, but the IRS generally doesn't know what you spend unless you're audited. If you're audited, the IRS could request your bank and credit card statements. I imagine the scenario is for someone spending money on a credit card to earn rewards and bonuses. Is something like this considered credit card hacking or travel hacking? I would just caution anyone engaged in this sort of activity to be sure to report any income reported by the credit card companies. For example, if they send you a 1099 form, be sure to include that on your taxes. If you're not sure, it's always worthwhile to talk to a tax professional. Does the IRS care at all about someone's credit score or how much credit line or amounts borrowed overall in relation to income? I don't think so. They ultimately just care about people paying their taxes that they owe. They don't even report tax debt to the credit reporting agencies. Generally, the average taxpayer doesn't need to worry about their credit score or history report being seen by the IRS, unless you're audited, and that's a different story. But in your example, if someone has significant assets but shows little income on their tax return, then that's clearly a red flag and could fall under what's called a lifestyle audit. The IRS actually has people on social media looking for, let's call them, tax evaders. These could be like someone who's being paid in crypto by an offshore gambling website, living the good life but not paying taxes, since they think no one will ever know about their payments in crypto. But if they're looking at someone like this and they see that they have expensive cars, houses, extravagant vacations, but little income reported on their tax return, unless you're a trust fund, baby, it would raise a red flag as far as unreported income with the IRS. By the way, that's how they got Al Capone on tax evasion.
Thank you, Noel. Any final tips, thoughts, anything you'd like to share?
I will say one last thing. If you receive a 1099 miscellaneous form from a credit card company, the taxability question is answered for you. Presume they, the credit card company, know what they're doing and that they've issued the form correctly. IRS Form 1099 miscellaneous income is only issued when the threshold of $600 of income is reached from taxable income payouts. So if you receive a 1099 miscellaneous form, then you need to report the payouts as other income on your tax return and pay the appropriate tax. Now, if you receive a 1099 miscellaneous form in the mail as part of a rewards program, don't ignore it. Even if you believe that your income should not qualify as taxable, you're better off talking to a tax professional. The IRS has become increasingly strict on tracking income from these sources, and you don't want to subject yourself to tax penalties and interest because you failed to report your credit card rewards appropriately when a tax form was issued. Thanks for having me on, Lalit. It's good to see you again. I hope you and Sabrina are doing well. Take care.
Thank you so much, Noel, from the bottom of my heart. I truly appreciate it. And for anyone watching here, coming to the end, comment down below with any questions. We'll see if we can have a part 2. But with that, you know how it is. See you soon. Enough. Peace.